Hoffman Weber Construction. Oh, recording in progress.
Oh, there we go.
Oh, there we go. I'm with Hoffman Weber Construction, been with them since 2003. So yeah, thanks for everyone for being here. Appreciate it. If, like Grant said, if you have questions, throw them in the chat box. We don't want this to be boring, and we don't want it to I don't want you to leave with not getting any of your questions answered. So make sure you please interrupt us at any time. We want it to be informative.
And I'm Ryan Arvla. I've been with Hoffman Weber since 2015. Been in the industry since 2004. I think one important thing to point out with James, he actually comes from an installer side. So he's installed a lot of materials over the years. I've, just like a lot of us, help family and friends or whatever from time to time, but he installed a lot of materials over the years, a lot of exteriors. So he knows a lot of things just firsthand. So I think he's a valuable resource in that. He and I team up on our multifamily side. So we try to be a resource, whether it be replacement of roofing, siding, windows, fix a leak, or just help people get some information that they might need.
And my name is Grant Hirschberger, and I work at MarshMcLennan Agency, specifically in our Community Association Insurance Services Department. So specifically working with condominiums and townhomes, cooperatives, multifamily residences. Some of you I've worked with before, some of you I haven't had the pleasure of yet. But you know, Ryan, James, and I got together a few weeks back, and we're trying to talk about, you know, how can we be a best service to inform you guys, to educate you guys, and then obviously be a board for questions that you have, because every single association is different. They're all unique in their own way. And so every little situation has its own nuances and context, and we want to at least, you know, provide as much benefit as we can. So we started off with what is one of the hardest hitting situations that we're seeing in, you know, the end of 2020 and the start of end of 2021, excuse me, time flies, and the start of 2022. And the thing that kept coming up is insurance increases, both cost and deductible, and the effects that the labor shortage and supply chain and building material costs were having on that. So we'll both have little portions. The guys are going to start off and do the supply chain side and the material side. And then I'll take a brief moment to talk about some of the insurance things and kind of the history. We're taking a look at where we've been, where we are, where we're going. So a little bit of history, just that we all are on the same page, where we're at, a state of the marketplace, and then where we're going, just forecasting and best guesses, and truthfully, how to prepare and be the most proactive. I think that's the thing that boards like yourselves and property managers who are in this call as well, I really respect taking the time out of your day to sit and listen to us talk, because you know, you care about your associations, and that makes a big difference, and it's going to make a big difference in the long run. So I'll stop talking. I'm going to hand the baton over to Ryan and James, and they'll get started.
Yeah, so thanks as well. Thanks for everyone for coming, board members, community managers. Greatly appreciate you taking time on your schedule. And it's an interesting topic that we're all dealing with in one form or another. And we'll go through this, and it'd be interesting to hear some questions as well as maybe feedback on what you guys are coming across as well. So where we've been, really, COVID-19 hits the US in early 2020. I don't have any dates, but from what I recall, either late February, maybe early March was the first known case in Minnesota, and really it was just a domino effect after that. People were working remotely. Students essentially had extended spring break as they're figuring what's going to happen here long term. Eventually it turned into distant learning, and all school districts could have dealt with things different ways. But first, I remember several weeks with my wife and I, we essentially were the teachers. And I don't know about you guys, but we are not. James actually was a teacher at one point in years past. My wife and I are not teachers. We learned that. So we're thankful that our school system eventually developed a better system for distant learning in the long run. Manufacturing plants, they scaled back. or even shut down, whether it be temporary or more long-term. Some of it was COVID cases at the plant. Some of it, they were just required to by their local decision makers, the higher powers. And then also you just had some companies that were expecting a large slowdown, and they're just trying to prepare for that. They didn't want an abundance of product and no way to sell it. There's just a ton of unknowns. None of us really experienced this before. Essential workers versus non-essential workers. That I heard a lot of different things at that time. That frustrated a lot of people. Fortunately, we were still able to work. But I mean, it really varied state by state, region by region. A lot of things, unique things going on with that and discussions had. One of the specific situations I remember with us, one of our suppliers that made vinyl siding, they made the mounting blocks that you would install like a light fixture to. They were out of Michigan. They were considered non-essential, and their plant was shut down. They couldn't work. They actually started up a new plant in Pennsylvania. I don't recall how long that took, but it's going to take a while to start up a new plant. Eventually they got product going again, but there was a lag of time there. They had a huge lack of supply. Suppliers and contractors had to figure out another plan, at least for the time being. So there's a lot of stories like that, but that's one of them. Virtual meetings, drones, no contact business became absolute norm instantly. Contractors like us were marketing different ways of what we're doing as a no contact business. We're using a lot of technologies that really helped us socially distance. What we're on right now is Zoom. Zoom existed before, I don't know if everyone knew, but Zoom existed before COVID hit. Since it hit, it's blown up dramatically. People are using it so much more than ever before. I don't know about you guys, but I do wish I would have purchased the stock in Zoom a couple of years ago. I missed the boat on that one, but with that, we're gonna lead it to James on the next slide with where we're at today.
Awesome. Cool. On there, Grant. Awesome. So real life example, actually, this literally just happened to me, unfortunately. And I do say unfortunately. So we mainly deal with windows, roofing, siding. That's kind of our bread and butter. But when we talk about products tonight, you can kind of apply that to pretty much anything. When we talk about products, they're experiencing a lot of the same issues. So unfortunately, my wife, it was my fault. I shut the garage door too early. She didn't know that. This just happened last night, and she backed into our garage door. So the garage door guy came out today. We got a new garage door 4 years ago. But the difference is now that garage door that was once X amount of dollars, it's now about 50% more. And instead of it being here in 10 days, it's going to be here in just over 5 months, I was informed today. So that's that example that I just found out about an hour ago is applicable to all three of these. So windows, what used to be, we come out to your house and or your association, and from the time we order to the time we install, 3 to 6 weeks. That's just standard. Some 3 to 4 usually. Now we're looking at 6 months, right? So you order them right now, we're not going to be there till midsummer. You know what I mean? So that's the struggles of the industry right now. And obviously it's not just Hoffman Weber, that's any construction company. So it's unfortunate with it, but that's just the reality. Obviously prices have increased as well. Roofing, for flat roofing products, usually you'd see something like a 2 to 3% increase at the end of the year. That was just to be expected. That was just adjusting for inflation, basically. Now we're getting emails typically every 45 days of here's a 5% increase, here's a 7% increase, and just those compound on each other. The other thing with that, products for colors aren't readily available. So you'll get your mainstream ones, your standard run of the mill stuff, but you're not going to get anything outside of that box, anything outside of the popular colors, your forest greens or anything like that, not going to see. You could see, but it'll just be much longer wait time, and some have just completely discontinued the colors altogether. Vinyl siding, largest increases we've seen in decades. That's due to multiple reasons that we'll get into as well. Limited color availability for that. And if for HOAs, for a 25 square house for vinyl siding, we can pretty much get any of that. Now you have 1,400 square of an HOA, that's really hard to get. So we're talking quantity, just in large quantities, that's become extremely difficult to get. So a couple of the problems we're facing. You can go next slide here. Ryan, you're a classic move from you.
Sorry.
Yeah,
All right, we good now?
Yep.
perfect.
That was one of the jokes when Zoom started getting so popular, and now I
Yeah.
fit right
Well, that
into the
joke's
joke.
old, so get to it, pal.
So metals, steel and aluminum, talk about specifically. That was part of a joke, James, dang it. So steel prices, we really saw large increases. We did a steel project, some steel siding last year at a HOA building, and prices increased quite a bit before I did the project. We did see some big jumps last year. It does seem to be stabilizing from what our suppliers are saying. The steel manufacturer I was talking to recently here earlier this week. It was actually yesterday. He mentioned that it seems to be stabilizing, but one example, coil nails that we use in nail guns. So a lot of stuff we install, we're using nail guns. We use coil nails in them, made of steel. He said a year and a half. When the day it's ordered to get coil nails from China, it takes a year and a half about to get that product. So for as stable as it is, there's still some great challenges like that. Aluminum is going to be the more challenging product out of the two metals. They're on allocation basically, which means there's a limit of goods that you can get. Depends on the supplier, depends on the manufacturer. You might be limited per month or maybe per year. Beginning of the year, the manufacturer tells the supplier, you guys can get this much product. So it's really important for us contractors, and maybe you as managers and board members for your projects, just to understand what do you have available? What do you have available? Is anything on allocation? How confident are you of getting product that we're going to need?
Ryan, if you don't mind me, I'm muting you for a second because I don't know if there's echo from me, but is there any specific reason why aluminum is in such high demand? Is it just a very common material used, across home construction, or is it, other factors of different needs or demands regarding aluminum, maybe in other industries? You'll have to unmute yourself once.
Well, more products are made with aluminum. Like for example, decades ago, it was common on homes to install steel gutters. Well, it's been a long time we've been installing aluminum gutters. A lot of times it's just easier to work with. There's a lot of material, let's say your window frames. In years past, they were wood. Well, you'd have to paint them, they would rot. A lot of them get wrapped with aluminum. And then there's a lot of other materials on our homes. People, more and more every year, people love to have, they say maintenance free, I say low maintenance because you need to maintain everything to some level. But people get sick of painting, people get sick of their materials rotting. And aluminum coil is a product that we can wrap a lot of different materials to in any color, well, almost any color out there. And can be somewhat cost effective, can look very attractive, a lot of different colors, and just keeps the maintenance down. You don't have to paint it, doesn't rot. Soffits are, those didn't used to be made with aluminum. So there's a lot of different materials that were not made in aluminum, and it's become it's a light product, easy to use. You can bend it. So there's a lot more needs with it today. And then they're just dealing with the shortages of material to make the goods, and then the deliveries as well. So there's not, I don't think any special, anything specific, but hopefully that makes sense.
I was going to say, just for time's sake, just a quick ad. There's 3 aluminum factories that basically produce 100% of the aluminum in America. And one of those 3 actually got shut down during COVID because of stuff we're going to get to. So that played a big role in it as well. But I don't know, Ryan, if you had anything left on this slide here.
Yeah, no, good point though, James. That was a huge factor. Absolutely. So, at some point that people are probably going to, contracts will probably be switching to other materials. That's how it's looking here. Going back to steel gutters, what they were before. Vinyl soffits. A lot of people in our area haven't heard of that, but we actually, they were installed here a few decades ago. Didn't really catch on, but they are actually installed commonly in other parts of the country, and we might be installing a lot of vinyl soffits in our area again soon. The huge spike of lumber and plywood last year, it seemed like it was going up every day. I'm sure most of you or all of you heard of it, and it was pretty crazy. It peaked in June, did some ups and downs since then, but from what I've heard just recently was that we're close to the June levels again. So lumber is high. Plant shutdowns discussed before. Lumber plants did shut down, and a lot of them are trying to catch up. Number one driver of lumber demand in the U.S. is the housing market. And if you guys have been driving around lately, you've probably been seeing more homes being built in the Twin Cities. There are definitely more homes going up. U.S. Census Bureau says 1.2 million on average for homes being built in 2016, 1.8 million on average per month in 2021. So that's a big increase. That's a larger demand in lumber materials. So that's a factor as well. Delivery, trucking, let's see. So delivery and trucking, the big thing was the ports. A lot of challenges with scale backs and shutdowns of the ports. I mean, U.S. imports hundreds of billions of dollars worth of many different products. So we're all affected directly and indirectly by that, and it definitely affected our industry. Just some of the things that I learned that some of the ports had double the amount of shipping containers stacked up. Some of the ships were actually sitting out at sea for numerous days. And then we probably all or most of us have items in our homes that has a little sticker on it that says made in China. Unique thing that they're dealing with right now or recently is they have a huge shortage of shipping containers. So their manufacturing plants are shutting or scaling back because they don't want to build material that they can't sell or they can't ship. So that's going to be a big effect on everything that we're doing, because we're going to be able to import less from there. Truck courier, we call them couriers when we get materials delivered to our job site. That's kind of trucking we reference as couriers. Big increases there. Challenges with delivery delays for sure. A lot of that. There's just a big shortage of drivers. That was a big thing with shipping, the ports. If you don't have the drivers to come pick up the containers, they're going to sit there and they're going to create issues. So shortage of drivers has been massive. One thing I was told by a supplier recently that what material delivery that cost $2,000 not too long ago would cost $5,000 today. So that's a big increase. Another story I had, another supplier bought $5 million worth of trucks here, and they unfortunately have a 12-month wait for those trucks. They still have trucks to deliver materials, but they don't have as much as they need. And they have some older trucks that are getting worked on in the shop and not very productive. So that's a big factor. Also, just yesterday, I talked to one supplier that said that manufacturer, they lost 2 long-term, very good employees. And they actually got offered a lot more money to drive truck. So I thought that was interesting. That basically kind of counteracts this. That's going to really be part of the correction in all this. Is where there's a shortage, there's going to be more money offered, and that'll be part of the correction. So with that, we'll lead to James with the next slide here.
Awesome. So where we're at with this, we got a little echo there. Labor shortages is one of the biggest reasons we have it. And as you guys have obviously you guys read the news and are, I'm sure, well informed with it as well, but workers with COVID, or if they're exposed to it, how that plays out in our industry is all of our products that are made. So roofing, siding, windows, all that kind of stuff, all the materials that go into it, they're made in a factory, right? They're manufactured in a factory where you have plenty of workers that are very close to each other. As soon as any exposures happen or someone gets COVID and you have to start pulling people off the line, obviously that delays things, right? Also, the 6 feet mandates and the protocols that they have to abide by, that also takes things much longer to be made because of those things. So how that all plays out eventually comes back to the consumer, right? Because my wonderful door that I am going to be patiently waiting for 5 months, that's going to be made in a factory somewhere, but they're not going to have as many workers available to do it, and the production of it will take much longer, right? So we've also run into next bullet point there. We have gutter installers where even on our own crews where it was hard for them to get guys to come back just because they were making more money on unemployment, right? So that's just a reality that a lot of people are up against, where if they could sit on the couch and make more money, it's hard to convince them to get up and go do hard labor. So plenty of that going on. Demand for workers is high right now, obviously, which is great with the increased wages, which a lot of people are getting. That obviously is a trickle down to consumers. So unfortunately, we can only absorb so much, and the industry can only absorb so much without it affecting the consumer. We're definitely past that point where the consumer is obviously feeling the burden of that as well. So you can go next slide there, Grant. Awesome. So the crystal ball here. So where we're going, obviously, I've been in the industry, like I said, since 2003, and I've seen a lot of things. I've seen a lot of crazy things. I haven't seen anything like this, right? So, and I don't think anyone has in many respects. And I'm not one to say that I do have the crystal ball, unfortunately. I don't have the predictive future of what it's going to look like or what's going to happen. Some expect things to level off in the spring. Some people think that this is going to be going on next few years, right? And my guess, if it were me, I'm guessing it'll be somewhere in between. I can't imagine we're going to be going where it's going to be spiking more than it is. But like I said, I don't own the crystal ball in it. The one thing I do know that I have seen in the last 20 years in this industry, once the consumer has proved that they will pay X amount for a product, typically for roofing, siding, windows, those manufacturers don't say, oh, all right, well, now we're going to give you, it was high for a while. Now we're going to drop it back down to normal again. We just haven't seen it. That has never happened since 2003. It's never gone high and then come back down. So with lumber, it spiked really high and it actually did come back down. It hasn't come back down to what it once was, but it actually did come back down, which shocked me. So maybe that's an indication of the future, that the 20-year trend, maybe it's going to go off course with it. Who knows? But the one nice thing, values of your homes are higher. So if you're selling right now, it's good. I guess that's the one positive we can walk away with there. So you can go next slide there, Grant.
Ron, you're
on mute again, man.
Understanding.
That's 3 strikes. You're out. You gotta go.
I'm out of here. Mic drop. I'm out of here. So understanding interest rates is important. HOA that we worked with for about, I guess, a few years ago. From the time they wanted to move forward with the siding replacement project to the day we actually started moving forward with it was about 10 years. So that took a long time. A lot of these are big projects with big price tags, a lot of decision makers involved, a lot of homeowners, and a lot of opinions. Whether like it or not, every homeowner has an opinion, and it's a valid opinion because they're a homeowner. They have stake in it. Some of the concerns you hear are, hey, I can't afford it. This project isn't worth it. Prices are too high. It's just really important that homeowners understand that it's not necessarily just about prices, but it's what's the project affordability? What's the cost to do it? What's the cost to not do it? Interest rates are a big part of that. A lot of these projects are financed, and our interest rates have been very low, which have allowed a lot of people out there to improve their properties where they might have not been where interest rates were at before, possibly where they will go someday. Talked about interest rates increasing. We haven't seen a lot of that yet, but it's very realistic to see that sometime soon. Just determining material selections early, knowing what materials you're going to need, what products are available for your project, the brands that are most available, the styles, the colors. Work with a contractor that can work on the design with you. See what your property would look like with different colors, different styles, and just understanding what is out there. Try to get ahead of the game and really determining what's available and trying to lock in on those things. Understand the market. What's the return on investment for your project? What's the cost if you don't do your project? Could it hurt resale value? Future price increases, are those going to cost so much more in 5 years from now that you're going to be kicking yourself by not moving forward with the project earlier? What's the cost to maintain? Sometimes there's a lot of maintenance involved. Old siding, for example, can cost a lot to paint. What is your cost to maintain, and what's your cost to not do that project? Getting homeowners involved seems like it really helps HOAs, trying to get them to meetings, which can be like pulling teeth sometimes, but just getting them out there, getting them involved, understanding the situation early, where money goes, what costs are, the biggest challenges your HOA might have. Never too early to get involved with creating a relationship with a lender. Too many HOAs I see wait till they need to do a project and then reach out to lenders. Reach out to one well in advance. Find out who HOA specific lenders are. If you're on the right track, if you're not, they can probably educate you on some things, improvements that you could make to get you on a better track, on a better path. Also understanding just relationships that contractors have with suppliers. With our company, our ownership and management pride themselves in paying bills immediately. Really helps us keep good relationships. Manufacturers and suppliers love that. Just strategizing on material availability. Right now, we have to continuously do that. See what's available, see what might not be available, what things might shift or change. Basically to end here, move on to Grant. It's a unique time. There's always challenges though. There's pros and cons to everything. So important to just have board members and managers be educated, educate your homeowners, and just partnering with good people that are going to help you go in a positive direction. We're going to lead to Grant.
Yeah, and I don't know if we want to, from my view, I can't see in any of the chats or chat box. I don't know if there's been any, but does anybody have any questions specifically on this point? No, we can move ahead, but just want to put that out there just in case. All right, I think we're good. So I'm just going to take a quick look back at the last few years of the specifically HOA insurance market and kind of just set the stage. I want to make sure we're all on the same page about some of these terms and kind of what is influenced by what and all these different things. So, first and foremost, everyone's very concerned about the bottom line, understandably. It's the money coming out of your pocket when you pay your HOA insurance premiums. And so that premium that you pay is significantly affected by your total insurable value, your TIV. So this value is used as your reconstruction cost, which is essentially the amount that it would cost if all the buildings were totally demolished and you had to rebuild from the ground up with exactly the same kind of materials, vinyl siding or brick or masonry or whatever it may be, that's what your reconstruction cost is. So it might be different from what your home is selling for. Sometimes the sale price can be higher, it can be lower. This is what's going to take to rebuild it. So the rate is the amount of premium you're paying per $100 of your TIV. So essentially, the more building value that the insurer is putting under their protection, the more your premium is essentially going to go up. Kind of makes sense. It's tied together. And this rate can vary by a number of different factors. It can be building materials. It can be the age of the building, the number of buildings, size, previous losses, all sorts of things. So in the past, and I use, James pointed out the other day, and I think it's a great point, I use this 2002 to 2014 time period for a couple of different reasons. First and foremost, we at MarshMcLennan have a lot of really great archived data from that time period that was easily accessible and ready to use and reliable. Obviously, I did some digging on state websites, did a lot of searching, and just wanted to make sure that the numbers that we had and the numbers that I'll present shortly are accurate and verifiable. So this 2002 to 2014, just a time period to show essentially what it used to be a couple of years ago, not all that long ago, really. But essentially, during that time period, the insurance market was typically offering rates of about anywhere from 10 cents to 14-cent rates for frame construction. So frame construction is, anything that's made out of wood frame. It's the typical townhouses that you see in the photos below. For masonry buildings, you could see even lower from the 8-cent rate, 12-cent rate. And at this time, the deductible trends were that it was very common that there was just one property deductible. So let's say it's $10,000 and whatever happens, whether it's fire or water or an ice dam or hailstorm, that was your one deductible. Obviously, as things progressed, the need for different deductible structures developed. So US insurers paid almost 9 million claims for hail losses, totaling more than 54 billion from 2000 to 2013. Now I'm going to stop here and make a very important distinction. And this is me just kind of trying to ease up, my perspective. We're an agency, and so we represent the clients. We don't represent the carriers. And so at no point in time do I ever want you guys to feel bad for insurance carriers. But these numbers that I'll present shortly are very significant in understanding why insurance carriers are doing what they're doing. Nobody wants to see their premiums go up. Nobody wants to see their deductibles go up. And any agent worth their salt is obviously going to try to keep them as affordable and reasonable as possible. That being said, there's a lot to take into consideration. So as you can see from the two charts on this slide, Minnesota is 6th in average annual claim severity and 2nd in average claims loss per year. There's only 2 states in the entire US that are on the top 10 for those 2 categories, and it's Minnesota and Ohio. So we're having a lot of large claims and consistent claims year after year, specifically in regards to hailstorms. In addition to that, 70% of these claims between 2000 and 2013 happened in the last 6 years, and the average severity in the last 6 years was 65% higher than it was in the first 2000 to 2007 period. In addition to that, this organization, Verisk, that I'm referencing below, found that very often, in fact, approximately 75% of the time, claims related to wind or hailstorms had a lag time of 6 months or more to be reported. Sometimes in many cases, even up to 2 or 3 years. And so, hailstorm would happen. Nobody really thinks there's any problems, so they'll move on. They'll have winter roll around, everything will thaw out. All of a sudden, somebody notices that there's damage, and we're already past the 8 ball on how quickly we want to respond, right? In addition to that, insurance is always very slow to change and adapt. So these changes have been coming for quite a few years, and it will continue to roll on as we move forward. This is a nice little graph. I guess nice is probably the wrong word, but it's a nice illustration of essentially the premiums earned and losses incurred by insurance carriers between 2000 and 2013. This specifically speaks to our records at MarshMcLennan with the carriers that we were working with. But you can ask any agency across Minnesota, especially the Twin Cities area, their data would look incredibly similar. As you can see, the money coming in does not match the money going out. And so rapidly, insurance carriers decided they don't want to do this anymore. And as they lower the amount of interest and more carriers pull out, you're going to see prices rise right off the bat. So that was that period between 2000 and 2013. Go to my next slide. So where we are now, that was the 13-year period back there. The average number of hail claims reported nationally, so this is across the US, was about 600,000, just under. So every year, just about 600,000 on average. Between 2018 and 2020, that number rose to just under 900,000, with Minnesota leading the way in top 5 for most damaging hail events. So as you can see, not only is this problem becoming more prevalent across the nation, but additionally, Minnesota continues to be one of the leaders in hail damage. So carriers look at that from a national perspective and from a state-by-state perspective. I do apologize for the gap in those years from 2013 to 2018. After I did a lot of Googling, I found that not as many people are as interested in hailstorm statistics as I am. So I don't know if that makes me a weirdo, but couldn't find a ton of reliable data there. Didn't want to fudge any numbers here. Important to note as well is that carriers are additionally responding to other weather-related events, typically called CAT events, catastrophe events. But these CAT events can be hurricanes, they can be earthquakes, fires. So when you have a fire in California and you have, Hurricane Ida, or I'm blanking on what the last one was, but that additionally affects the perspective across the nation. Additionally, as more and more carriers had those low wind hail deductibles and got hit with massive hailstorm hail claims, more and more carriers decided it wasn't worth it and they pulled out. And when that comes to fruition, you see that this puts additional stress on the remaining insurers to pick up the additional slack, pick up the additional HOAs, which increases their exposure and then compounds because the next hailstorm, now they have even more associations that they're going to have to insure. Again, the healthiest market for everybody, and again, the most affordable market for everybody, is one where there's plenty of carriers within the state where you can spread that risk out. You don't have one carrier with a giant basket holding all the eggs, because we've seen what happens when that is the case, and it doesn't end very well. Additionally, across the state of Minnesota, the current range of insurance rates that we are commonly seeing is anywhere between 19 to 25 cents. So if you remember the slide from a few slides back, we were more in the 14-cent range. Now we're at 19 to 25 cents. There's always outliers. There'll be situations that if you have a better constructed building, if it's brick exterior, that will buy you additional extra cents of rate. But because of the reasons that Ryan and James mentioned earlier, the reconstruction cost of homes is rising dramatically. So not only does it cost more to rebuild an association, but also the rate of insurance per your total insurable value is also going up. So you're seeing rises on both ends. Additionally, we're seeing peril-specific deductibles, meaning that carriers said, there's no way we can have just one $10,000 property deductible and have that cover everything. Hail is destroying us. They're going out of business, essentially. So within the last 10 years, these peril-specific deductibles became increasingly popular. In Minnesota, it's nearly impossible to find a carrier who will provide a policy without one. If you are an association that is lucky enough to have a policy without a separate wind hail deductible, I would hang on to that for a bit. It is probably going into extinction, and if you've been grandfathered in, it's very, very nice. They can come in a variety of different options. And moving forward, one of the biggest things to consider, and this is a conversation to have with, your board, with your homeowners, with your agent, is what is our appetite for risk? So as you can see in the graph displayed right now, the blue insurance, I think I call it ABC insurance, they have a higher premium by double the price, right? But in the event of a wind and hailstorm, they're going to pay almost $1 million less than the cheapest premium policy, the LMNO insurance. And so it all comes down to, at what point do we want to eat some of the appetite of risk, essentially? So if you want to pay a little bit more on the front end, you can protect your association from having a high deductible. You maybe want to pay a little bit less on that premium side, you'll have to take a higher wind hail deductible. Again, these all come with conversations, and I think they're worth having early and often about what are we prepared for? So are we budgeted for a higher premium, but then we don't have to carry as much money in the event of a hailstorm? Or do we not really have enough money budgeted for the premium increase, and maybe we should have a little bit higher wind hail deductible for the time being? There's advantages to both, and there's every association has a different situation that makes most sense for them. Additionally, we're seeing more and more prohibitive endorsements and exclusions. I'll start first actually with the cosmetic damage exclusion, essentially stating that, and Ryan and James, feel free to jump in if you've seen, I know you've seen this personally, but if there's damage to an association from, say, a hailstorm, but it does not functionally damage the exterior, say that there's water intrusion or any type of elements intrusion, they don't have to replace it. So you'll have dings and dents all over your soft metal, but not necessarily meaning that they have to replace those. It's pretty prohibitive. Nobody really wants, soft metal that looks like golf balls. But James or Ryan, I don't know if you want to jump in at all on this situation or how you've seen it play out specifically.
Yeah, you'll see it a lot with, and that's why it's important to obviously talk to Grant. He can explain the policies of what exactly you're getting into so you understand your policy. That's why you really need to talk to an agent with that, as we as contractors can't really discuss that. But getting to the valley, your metal valley where your roof kind of comes together, you have metal there. If that's dinged up like crazy, that would be an example that Grant just gave, where some insurance policies are saying, well, hey, you know what, it still sheds water, we're not paying for that. You could have the fascia, so the aluminum on the eaves of your association, your building there, that's typically aluminum, that can be dented like crazy. Well, technically it still protects the wood behind it, still sheds water. If you have that exclusion in there, they're not paying for it. It can be a total eyesore, but they're not paying it for it. So like I said, so talk to your agent, talk to Grant. Those are all things you should really know.
Yeah, I appreciate you weighing in, James. I think the important part here, and it'll continue to be, my largest message, is have the conversation, because every single HOA is different. If you're an association that most of your, easily cosmetically damaged, building features are very high up and not, you can't see them, maybe it's something that's not that bad for your policy. Or if you have, a single story townhome building, maybe it's very bad. You have to look at each individual situation separately and analyze, what do we want? What do we find important? Additionally, there's the non-matching endorsement. Typically when, if damage has occurred to a certain portion of the building and an insurance carrier cannot find a sufficient match. So let's say your vinyl siding is pretty weathered and it just doesn't match anything that's available right now. A carrier would have to replace the entirety of the undamaged portion as well, leading to larger and larger insurance claims. If there is a non-matching endorsement applied to your policy, essentially what it means is carriers will do their best. They'll try to find a match. If they can't, they'll go with as much of a close match as they can find for that patch. Sometimes it's very, very close and you wouldn't notice it unless it's in a certain light. Sometimes it's incredibly noticeable and looks like, spotted cow spots on the side of your building. It's important to assess, again, the age of your building and look at, talk to a Ryan, talk to a James. Do we have plenty of easily replaceable siding? If you do, then this isn't something that really is all that concerning. If you don't, it's something that should concern you a lot because you may end up with spotty siding that won't look very good. Again, you got to have the conversations, you start talking about things, and you get to a solution that is preferable for everybody. I'll keep moving along here because I know we're getting close on time, and I'm sure you guys are really enjoying listening to insurance conversations. But more and more we're seeing underwriting appetites narrow, meaning the insurers want very specific things. They want newer age buildings, they want less number of buildings, they want smaller total insurable values. Only associations in certain zip codes, as you can see from the chart, certain zip codes in Minnesota have the highest level of hail damage. So a lot of different things, and that'll factor into what's available for your specific condo and townhome. Last but not least, rate trends. We're seeing things increase right now. As increases happen, as the rates continue to go up, you'll see more and more insurance carriers realize that it's worth their time to come into this space. And as more and more competition comes in, as you see across any industry, the more competition you have, the more price gets competitive. And so as those rates go up, I would anticipate that they will for the next couple of months and potentially a year. As they continue to go up, you'll find more and more carriers entering the marketplace, and they'll balance out. And having more carriers in the marketplace, you can spread that risk out. There is a light at the end of the tunnel, but it has to come with other people coming in. Again, all your eggs you don't want in one basket. Deductibles, I would say that the wind hail deductible is likely not going away anytime soon, or probably ever. So that's one we'll have to stick with. Again, it comes to having the conversation of what makes the most sense for your specific association. But what can be done? You budget early. You estimate a little bit high when you're budgeting. I know a lot of people that I've talked to have been surprised at some of the estimates that I've given, but realistically, you don't want to be caught with not enough, especially if you have an older association, a larger association, more buildings, more total insurable value. So round up, and from there, see what makes the most sense, and communicate those priorities, not just to your builders, not just to your James and Ryan, but to your insurance agent. Communicate what's important to you. We want to be most protected in the event of a catastrophic hailstorm, or we want to be more protected premium wise this year because we're working on other things and we don't have the additional funds. And then from there, continue to talk about what is your backup plans. How are you going to prevent further losses, not just for the insurance carriers, but specifically for your benefit? Do we upgrade the strength of the shingles? Do we upgrade to a little bit better siding? Do we, fix that one pipe project that we had because it keeps leaking? There's all sorts of different things that you can do, and it comes down to having that conversation early and, opening that channel of communication. So we've got a little bit more time. I'll open it up for questions here. I know I just threw a lot of information out, but please feel free to weigh in.
Grant?
Yes. Hello.
Grant?
Yep. Hi,
This
Gary.
is Gary Swoverland. Hi.
Go ahead,
Got
Gary.
a question. As you increase your deductible to lower your premium, let's say you take a 5% deductible and you have a fairly high value property that has, like twin homes. And so you may end up with $25,000 deductible per $50,000 deductible per building, let's say. As you increase that deductible that high, how do you see that impacting the individual? Because you're not going to, probably most associations won't fight for those losses. They'll special assessment against the owners, and you see the owners being able to deal kind of an issue.
You cut out a little bit, but I think I understood what you were asking, and I'll go ahead and answer it. And if I didn't address it properly, let me know. But you're essentially saying as those deductibles get so high that, you're almost self-insuring for the roofs in the event of a hailstorm, how does that get paid out? I don't know about you guys. I don't have $50,000 just lying around. And so inevitably what it's going to come down to is, first and foremost, finding out if it makes sense for your association. Does that high deductible work? And can you communicate to the rest of the homeowners that this is what the deductible will be in the event of a hailstorm? From there, they would want to go to their individual HO6 carriers and have a conversation, HO6 agents, and have a conversation about our loss assessment needs to be set at X amount of dollars, because that's the worst case scenario in the event that we have a hailstorm and we're on the hook for that certain amount of money. Again, you don't want to, I would never encourage people to just take a super high deductible just for minor premium savings. But sometimes it's the only option that some associations have, and it's the only option to get you that insurance policy. There's no other one. So again, it's the conversation, making sure that the homeowners are aware that this is what would be their responsibility in the event of a hailstorm, and then encouraging them to speak with their HO6 agents to set their loss assessment at a proper level. Did that answer your question, Gary?
Yes, thank you.
On top of that, I think we see it a lot where board members don't realize how big their deductible is, or it just seems like there's a lot of times that people are surprised when they do have a claim. We're trying to help them with the restoration process. I think it's really important that someone like Grant, also if you have a community manager, that they maybe every year you go over these details again. Board members change. People forget things. There's a lot of details that as a board member you have to go over, and a community manager, there's so many details, and it can be easy to forget these things. So I think just covering them every year, and it can even be briefly. So try to avoid less surprises. Try to avoid surprises really when if your HOA does get hit by a storm and you need to file a claim. Just being educated on what you have to work with, the pros and cons every year.
To that point, the name of the game here, and again, I know we dropped a lot of not ideal information on you guys. We didn't want to be too gloom and doom, but it's having that conversation early and discussing what's realistic, what's available in the marketplace, what can be done from a construction standpoint, what can be done from a building material standpoint, and to get your arms around what are the options on the table for this year and the next couple of years. So having that conversation is really, really important. Are there any more questions? I know we got a little bit more time, so if you got them, shoot them at James or Ryan or I.
You did such a great job explaining, Grant. They have no questions there.
Well, had to talk fast, or maybe I bored them to sleep. We don't have any cameras except for Mark over here, so people might be snoring. Well, I think Tessa, are we about to go?
Yeah, I just have a quick question. So once an association has like either the matching exclusion or cosmetic exclusion, like what does it look like for renewal when they're trying to get into a new policy, if they're trying to get away from that? Like if a claim isn't covered because it's cosmetic, and then they're trying to renew and get away from that policy, does that limit their options?
Tessa, that's an incredibly good question. That's one that we have as well. So we have yet to see it play out. Honestly, in the courts is where it's going to end up coming, because that exact situation is potentially, something that may happen. What would inevitably, and this is just a prediction, I don't know for sure, but if there were to be, so you've got a cosmetic damage endorsement, there's a hailstorm, there's some damage to the soft metal, there's a couple of different options you could potentially negotiate with an insurance carrier. It may be, going to some sort of actual cash value, which is also not ideal. Or it may come down to essentially keeping that endorsement on until there's, enough money built up to make a replacement, or at least enough, where, you could replace a significant amount to make a carrier interested to insure at that point. Again, not great options. And I don't, of all the new endorsements, the cosmetic damage one makes me pretty concerned. I really don't like it personally. Anything prohibitive to your coverage is bad or not preferable. But for many associations with their specific scope of what the, ages, the sizes, et cetera, sometimes that may be the only option, unfortunately. And so you at least have to get the insurance and then from there, see what's doable moving forward. So that's a great question. And again, always happy to answer those, as those come up. And that's something you want to discuss with the boards. Is that a risk you're willing to take if this one policy might be a significant amount cheaper? So did that answer your question, Tessa?
Yeah, I just have one that has an open claim and so they weren't able to switch coverages at the renewal. And this endorsement went on and now we're wondering like, what's that going to do if, this next summer there's a hail event or whatever it is. And so it's not covered. And yeah. How difficult it'll be to get away from them after that.
Yes, it'll be a tricky situation. And that's one that you kind of have to take one step at a time, essentially. And see if there's, another carrier that you can get to, agree to the same thing. And then from there, can you work your way into a loss-free section where, all right, the, siding isn't great, but you haven't had loss in a few years. Maybe you can negotiate something. So that's a tough spot. And it's absolutely something you want to keep at the top of your mind if there's a policy that has that endorsement on there.
Okay, thank you.
Absolutely.
Is there
Oh, sorry, go ahead, Mark.
Marshall Swift? You probably use that for replacement costs. Are they accurate? I mean, that's what we're looking at our HOA to make sure we have it up to value or to replacement costs. My question, right now we're in a reserve study. And I think the reserve study for replacing our roofs are about $75,000 less than what I think the roof is going to cost us. I'm sure we're using a Marshall Swift replacement costs on that. So are you using something besides that?
On the insurance side, we're using Marshall Swift. And then we're referring it to, essentially what we know of the marketplace. And if something doesn't seem right, there's a lot of different triggers that would indicate that something's undervalued or overvalued as well. But that is the primary program we use. And it's important to say that it's an estimate. So there's always different ways to additionally feel confident about the number that you're providing. James and Ryan also can weigh in on some of those techniques. I don't know if you guys, do you do building valuations or anything of that sort?
I mean, we give you estimates for roofing, siding, windows, but not a full, if it got bulldozed, we don't give a estimate of that.
Yeah, I think the current marketplace, Ryan was about to say something. I saw that. Go ahead, Ryan. I was just going to say that the construction cost marketplace and insurance marketplace is changing so fast that inevitably, even the estimate programs that have proved for years to be reliable, they're having a tough time keeping up. So we can always try to do our most in-depth, most recent, and we obviously renew it every single year, but if you want to get closer and closer to a project and we want to keep renewing, or refreshing those values to see if things are changing, it'll give you a little bit better of an idea. But inevitably, it is an estimate based off of what we can all agree is a very volatile market.
Thank you.
With the time here, let's maybe just wrap it up. If anyone still wants to stick around with questions, that's no problem, but it'd be nice just to kind of thank everyone for taking time to come.
And Mark, I want to make sure your question is answered. So feel free to give me a call or shoot me an email, and I'd be more than happy to continue to, work this out with you as well.
Yeah, I will call you. Thank you.
Okay,
Grant.
fantastic. Thank you, everybody, for sitting in. Oh, James, go ahead. I cut you off.
No, I was going to say contact information is on there, so reach out anytime.
All right, thank you, everybody. Really appreciate your time.
Yeah, thanks, everyone. Have a good night.
Thank you.